This episode is intended exclusively to provide information and education to help individuals better understand cycles. However, this information is not be construed as professional advice as to the buying and selling of securities or other investment instruments. In no event does the host express any opinion with respect to or make recommendations regarding the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading securities. Buying and selling decisions are solely within the personal discretion of each individual.
From the mind of Lars von Thienen.
Yeah, hello everyone. Nice to meet you again. Welcome to another episode of Cycles TV. We are talking about gold today, and I hope at least my sound quality is a little bit better than last week. I think we had some sound issues last week, so if you can comment on the sound and audio again, if it's okay today, just let me know. So thank you for being live, Mahandra, Dale, Steve, Andrea. I see you all in the chat section. So today is also again the time to put in some questions. So I will take the time at the end to get back to your topics. Yeah, let's talk about the gold price. And for sure, we are the foundation for the study of cycles. So let's analyze some cycles on the gold price, right? So therefore, let's jump into our studio here. This is the weekly series. So let's start with the weekly long-term perspective as always. And then let's ramp up fresh just as everyone would see that chart. So this is the basic view how everyone would see the gold price analysis. If you open our cycle analyzer dashboard, it's loading the past 850 bars. By design, you can change this if required, but let's start with that setting first. So we have enough history to analyze the current past with analyzing weekly data. On the bottom here, we can see the spectrum analysis of that weekly series. And here to the right, we see the peaks, so the cycles which have been detected by that or in this spectrum here. And the most prominent peaks are shown by our ranking mechanism. So there are two, but I will walk you through also from the spectrum perspective. So I think it's quite clear that there is one key dominant cycle in that series, which is here visible with 230 weeks. That's the most dominant cycle in the weekly series we can observe here on gold. The reason why that's the most dominant, so you can see to the left shoulder here, it even goes down to the zero line. So the separation to the left and to the right of this peak in the spectrum is quite close to perfect. And from the amplitude separation, there's also a huge offset between the next lower peak, which is just on this level here. So the gap that there's no amplitude here in the lower range would clearly identify this as the most outstanding dominant cycle. You could argue to the right that there might be a second longer term one with a length of 365 weeks, which is shown here. But if you know how to read that spectrum, that's more like plateauish. Yeah, it's so the sharpness of this peak is quite more obvious from a visual perspective than this view here. And the second feature, which gives me an indication maybe not to use this longer term one, is the so-called strength value. Yeah, so the table by design is sorted by strength, and the strength score is an indication how much influence that cycle length has to the price movements compared or relative to the other cycles. So, and we just should compare them in a relative fashion. So the cycle with a length of 230 has a strength score over 3, while this one has 1.6. So this 230-week cycle is more powerful in regards to the price action. So it has twice the impact on the price compared to the 365. So 365 weeks. So said that, therefore I would not use this one even if this is anyhow outstanding. So it's the quite obvious one to watch out here is this long-term cycle. So therefore let's now activate this cycle here on the chart. So when we see this cycle has rolled over since November, December, now into a long-term downward phase, which goes through the complete 2025 into even late 2026. So for the next 2 years, this cycle is in a downward situation and the last upswing cycle. So we could also argue we are close to a regime change. So 2023 to 2024, this has been the upward leg. Now the next leg, which is around the corner, is more showing the downward phase of that cycle. I mean, for sure, that's not enough to give us some valid trade decision making, but at least we need to be aware where we are in that long-term cycle. We could even load some more data to our charts. So even if this is what I partially recommend. We can also move to log scale. Let's anchor the start somewhere here at the kilo 2001. Let's update the analysis. So this is the huge upswing. Now taking into account 1,300 bars, so 1,300 weeks going back into the year of 2000, so 24 years of data using here in that analysis. And you can still see, I mean, slightly changed. Yeah, it's not 230, but you can see how dominant this peak is even if we add more data to our analysis. And I think that's quite interesting. So even if we add more data, you need to be careful with the phasing of the current phase, but it's not quite a big difference here. So we can identify this long-term cycle on gold, which seems to be rolling over or has rolled over just in the past 2 weeks. What I might highlight here is another feature which I just recommend, but let's switch to the normal view here. What you see now here at the bottom of that chart is what we call the cycle highlighter, which gives you an easier way to just verify this individual cycle. So we are just plotting the cycle with 239 weeks, yeah, over the price series. But here at the bottom, and to verify amplitude and phase shifts in that cycle, which is not easy to spot in the top window here, but at the bottom, you see the same theoretical cycle plotted in red. That's the same as on the top here. And in light blue, I hope you can see this in the video stream, we see just the extracted price movement related to the length of 239 weeks. So the blue line here is exactly the price movement related to a length of 239 weeks, overlaid now on the theoretical cycle. In an ideal world, you will see a perfect match between the price cycle of that length to the theoretical sine wave cycle. So now we overlay the perfect theoretical cycle with the real price cycle in the underlying price series. So that's now interesting. And you can spot if we have a huge, let's call it correlation between those cycles, we can confirm that this cycle is on. And even more, you see shifts in amplitude. So for example, here, we have an amplitude shift of that cycle. So the cycle is not as powerful in this time as before, because the amplitude, the real amplitude is here, while the theoretical amplitude level is here. You see this also in price. So this cycle was not as impactful in that period here. Same here. And you also see, you can see slight slight shifts in the real turn. So this is the theoretical perfect turn, and this is more the real turn here. So you see also the phase offset. Yeah? So you can spot the phase offset, you can spot the amplitude offset, and if you have some kind of perfect match here, you can then be more or less confident that this is the next expected upswing here if you see that nice behavior of that cycle. So I just wanted to bring that to your attention if you are new to cycle analysis. This method was initially published by Brian Millard. He called it cycle highlighter technique. It's just a little bit advanced here, but it goes back to the idea of Brian Millard, and Brian Millard extended the work of Hurst. And this is now the extended work from Hurst, put forward by Brian Millard, now even a little bit extended here as the cycle highlighter. Okay, but that's the weekly series. Let's now switch to shorter time frame. Let's now switch to the daily. And keep in mind, or just remember, we have a cycle length of 230, 240 weeks, long-term weekly perspective. Okay, now I have switched to the daily price chart of gold. Same starting point as always. You see the spectrum here at the bottom. Here it's not as easy, yeah, as it was on the weekly chart. So here I would discount this long-term cycle here, long-term daily cycle, to be honest, because it's just a huge plateauish peak with from a strength perspective, just a lower value from the strength somewhere in the middle, and the shape is not as perfect, so it's not really to the left going down sharp. So the next important cycle showing up here has a length of 110 days. In this case, we're talking about days. Let's start with this one. And we see it has also a huge, nice strength here in that relation. And let's start with that cycle here now overlaid. So let's zoom in a little bit. And let's do the same principle here again. So let's activate the cycle highlighter. First here, you see it here at the bottom now for that cycle. I can even zoom out a little bit here so that we see the past behavior, and let me explain the same principle as before. Here we have a nice correlation between the light blue and the theoretical red just over the past 1, 2, 3 iterations, even 3.5 iterations. It was perfect. Here you see, by the way, this is where you have the phase shift from the real top and the theoretical top, or you could also say here the cycle was completely off. In that period here, we have a huge phase shift, we have a huge amplitude shift, but from this peak here, the swing is again almost perfect here. And you can, it's like similar if you connect the tops and bottoms here on the price chart. It's just easier to read here. So the same procedure as always, I try to explain that way, is connect here the tops with the bottoms, and then you plot that kind of zigzag as overlay to the price series. And here you will see you will not find a real top and a real bottom here, so that's why. But you see it very easily on the cycle highlighter that here that cycle was off, so this was a failure. So let's not plot it here, and we even won't find a correlation here. But then from here again, so here the top, we see from here to here and here, it's more lining again. So we have, let's call this one failure. So we have one failure, and we have 1, 2, 3, 4, 5, 6 working repetitions. So that's, and you can see that more easily on the cycle highlighter than drawing these kind of zigzag lines. So therefore, make yourself comfortable with how to use the cycle highlighter. This will easily help you to identify how many of those swings are really identified in the isolated price action of this single cycle. Therefore, it's important to understand that technique. But let's get back to the overlaying price chart. And this gives you kind of confirmation. That's why I tell you this gives you confirmation to use this cycle also in forecasting. I mean, that's the reason, or the main reason we are all here together. So if you have that confidence, or you see 6 out of 7 repetitions in the past have an almost perfect fit, yeah, with real price swings related to that single cycle, you could use that. And that's why the cycle highlighter gives this as additional feature. I will try to bring this in a single mathematical feature later for sure, but at least you need to understand how to get your comfort. So we need to have a comfort level to use the cycle or not. But said that, this now brings us close to an top of end of February, a theoretical top, yeah, let's say it that way. So this cycle is now due, and we also see the last swings, as we have seen, are quite perfect. So we are now approaching the bottoming window from a timing perspective here. No? So I would count this is the window of opportunity from mid to end February to early March. So where we could expect then the daily cycle to top out. I would not use the shorter terms. As explained, I will not use the longer term cycle. Franz, you have a valid question. So bringing up the Bartel score on that cycle here, which is very low. It is a very bad cycle. That's why you see the red triangle here. Bartels, as we know, is more statistical significance in the whole data set. So not just related to that single price action, to the whole price action in that series. And therefore, I think if you see, let me clean up the chart again. Wait a second, please. Let's remove that cycle. Let's just show it at the bottom. You see that from a Bartel score related to the observation period here, there is no real statistical significance in that cycle seen here, as we have, more or less having that huge linear upswing here from a daily perspective, which cannot identify that cycle from a statistical significance. My personal observation is, and I will more get away from this statistical significance and Bartel score. So I would not pay too much attention, at least if the other conditions which I just explained have a quite perfect measurements in terms of peak prominence, strength, and rating from an amplitude, strength, and ranking perspective from the prominence in the spectrum here. So that's at least the latest findings, that this is more important than the statistical significance score from Bartel's calculations. But okay, fair question. So said that, the next step is that we need to bring this on par with how to improve technical indicators. Let's get back to the weekly. Let's remove this one here, and let's bring in what we use as the cyclic tuned RSI indicator, which is a kind of relative strength optimized to this cycle here, but it's using half of that cycle. So that's why we see the CRSI with a length of 120, why we have the dominant cycle 240. That's why we see 120 here. Okay. And now on that technical indicator perspective, you see that we have reached a level which also would count from a price action. Yeah? So just judging price action, that we are in an overbought condition here. You know how to read these bands here, which is in alignment with the timing, so long-term timing. Okay, let's do the same on the daily. So here on the daily, you see we are close to approaching that technical condition. So we are not there yet, but this is just price. So this is time. Yeah? Here we see the time cycle. This is pure price information. So the perfect situation would be that somewhere maybe in the next 2 weeks, we would see also the price action to confirm an overbought situation in the same range of the daily cycle. If we would observe that, then we have a perfect fit between the weekly, topping here price and time in alignment right now, which could become in alignment. The first days we had a signal here in, back in October, but at that point in time, we have still been on the positive side of the long-term cycle. So now as we are rolling over to the downward phase of that could become interesting here in February when price action might confirm that point. And last but not least, you could also plot that on your own price chart. So once you have done your homework in regards to cycles, I mean, you know the length of 111 on the daily, you know the major lengths of 230, 240 on the weekly, you can always roll over to whatever price chart you use. So just for easy using, you know that that's more the easy one here. So you see the CRSI from TradingView, which is also a free indicator you can use. What is interesting here is now that we are reaching the condition, and it's conditioned to show you this upfront. So I'm using half of the cycle length on the daily. So you know it's 111 on the daily. So half of that is 55. And the weekly had a resolution of 230, so half of that is 115. So this is how I set just the parameters for those indicator. And you know the background shading is related to the weekly long term. So if it's shaded red, we know that the weekly price condition is also above the upper threshold line. And this is showing the daily. So on the daily, for that case, we have also reached above the upper line. So on that price chart, we are in that condition now, which would fire up a possible overbought condition or a sell signal, however you read that. And one of my cyclic momentum indicators is showing that we have a kind of divergence here between price action, which is still going up, while momentum is still positive, but it's going to the downside. Okay, so I see 2 topics. Let me try to directly jump to your questions. I see some important topics. So Epis and Keith, I see you are just have some issues on the price chart. What I would recommend is, please, there was an update on the weekend. Maybe you need to refresh your browser cache. So what I would recommend to do, refresh your browser cache. You can do this on, I don't know which version you use, but if you use Google Chrome, I think you can press Control Function Key 5. Control Function Key 5 just refreshes the browser cache for that page. Maybe you need to do it differently, but please try it out. Steve, Keith, and Epes, refresh your browser and let me know in the chat window if this helps to resolve your issue. I think it should help to resolve that issue. So just let me know. Okay, so, and let's get back to your questions again, now on the content again. So BMO, looks like the second half of 2025 into 2026 will be harsh for all risk on assets, including gold. Yeah, that's, I think, what we can see here. So it starts now and could even become more evident in that. So Epes, you need to clear the browser cache. Log in, log out is not enough. So I think from Keith is just reporting that this worked. So control function key 5, at least for Google Chrome. Clear your browser cache, please. That's the key here. So, but getting back to you, Bimo, I think exactly this is what the long-term cycle says. And yeah, for the dollar index or other assets, we need to do an own analysis, but maybe not today. So, but Effa, you have a question on the CRSI. Is a break by the CRSI, say upwards, stronger when it breaks the lower band than a break of the upwards of the upper band and vice versa? Okay, let me explain how those bands work. Zoom in here a little bit on the upper section. So there are two different ways if we just observe the upper band, which is the blue one here, which is a dynamic upper band, similar to the static RSI indicator. The first break you will see is to the upside here, once the indicator line crosses from below to above the upper band, which is more confirmation of the upward move. But you need to watch out when it starts to turn, exactly here. So these points, when it just breaks from below to the upside, this would be a confirmation that there's a huge upward swing in place. And then you watch out for the points in time when the signal line starts to turn down and then breaks below the upper band. These are the conditions when to sell, or when market will reverse at those points. So this is what still needs to be confirmed. So we need to wait a little bit until it changes direction and then breaks below the upper band. You could have the opposite, which is here, when we break below the lower band from the signal line breaks below the lower band. This is more confirmation of the downward swing, but you need to be careful because at any time the reversal could take place. So then it reverses and then you wait until it breaks from the below the lower band to the upside. And these are the key signals you are looking at, signals you are looking for when the signal line breaks from the upside to the downside and from the downside to the upside to those bands. And they are both similar powerful in the direction of the longer term trend. So you could not read those signals on alone. That's why I show always, you see, when these signals are most powerful when two time frames are in alignment. Now let me show you this here. So you will only look out for sell triggers, which have happened here and here, when you have the red shaded areas, or we just had one signal here. Was to show you the signals, which was here, here, and another one here. So here we had the three sell signals. This is not a buy. This is not a buy here. So because we are still not confirmed here, the only buy signal we have seen here on the long term was exactly here. So this was the perfect buy condition here. And we had another two ones here and I think here. So this really helps to filter out whipsaw signals on that indicator, which I think will make it clear. So this would be been the points in time from price condition to go long in gold. And you see now here we have now three triggers, or the latest one here, or at least it popped up today. not today, but just currently. This is why I'm hosting that session today. So that's the daily for sure. And if this is in the timing condition, it should work. Okay, yeah. I think that's mainly it for today. I think we have a clear perspective on gold. So from the weekly and the daily, it's an interesting window to watch out now for the next 2 to 3 weeks. If price will confirm a possible topping pattern, at least from a timing perspective, the weekly has now rolled over. And if by end February, beginning of March, the daily time window kicks in, and if we see it confirms on the price action, this could become an important change in trend for gold. For sure, I think you mentioned that also here. I think everyone should put that into context also for silver. So for sure, Ron, you're correct. Silver and gold most of the time move in parallel. So I would propose that you do a similar analysis also on silver and see if this confirms the analysis or contradicts the analysis. So that's then the case, how to get more confirmation, more comfort for using the cycles I've just shown. Yeah, thanks for taking and spending the time with me today. So hope to see you next week, same time, same place. Hope you learned a little bit on cycle analysis. I tried to also bring your attention to the cycle highlighter method, which helps to detect phase and amplitude shifts of an individual cycle, which is important based on the standard features of a cycle to get some judgment if you should use a cycle or not. So this was also the educational session for today. Please use it in the Cycles platform on your assets. And for sure, I mean, this is education. This is not a forecasting or timing service, but I think it makes more fun to analyze live data sets instead of just rushing through the past. So have a safe week, and we see you again next week.